The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We'll take a look at Monday's trade action. Quartered soybeans were mixed with a little bit of strength in new crop beans, some pressure of the wheat trade. Most of the excitement, though, was in cattle and hog futures as we started off the week. Let's talk about it. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, hope you had a great weekend. Thanks for being with us here today. And I would say overall, a little less chaos in the markets, really across the board on Monday as we started off the week. And I think we should start on the livestock side of the ledger because that's where a lot of the green on the screen, the excitement was across cattle and hog futures. Mainly on the cattle side, though, it looked like on Monday's trade, John.
Yeah, a real good day to start the week here on Monday for both the live cattle, hogs, and feeder cattle markets. And we're just seeing some money kind of flow back into the marketplace. I mean, outside wise, we're tied to the stock market. Stock market came out firmer this morning, and cattle seems to have a really good correlation with that market right now. We saw that definitely last week in terms of how things were moving. But, there's also some reasonings going on here, too. If you look at open interest, we had a big drop in open interest. We also saw the funds take a lot of contracts out of that cattle market here going into Tuesday's Commitment of Traders report. And just very much like they did with the corn market here a few weeks back, it wasn't that they were buying shorts, as they were just getting out of longs, probably using the funds to cover losses in the equity market or somewhere along those lines, or maybe just moving some money to the sidelines. And all of a sudden here, we still got friendly fundamentals going forward in that cattle market. I think we're starting to see that money flow back in. Just talking to producers today, cash market last week just was not very attractive. So saw a lot of bids get passed. So you got packers are going to be looking for some cattle here this week. And I think we got a chance this market can work itself by higher again based off that cash trade, especially with the shortened holiday week. Adding to that, the fact that we're right around the corner here from the old grilling demand window. So I think that's going to bring some more bids into this market too. Just last thing is we saw those cattle and feed projections for Thursday today, 98.8% or 98.9% cattle on feed as of last year. It just kind of just tells the situation that supplies are tight. Packers are going to be looking for cattle in a key window. And I'm still thinking we got a chance to get this thing back up, challenge some of the highs. In fact, that June contract in terms of live cattle has got a gap up at 204, and this market may want to go chase that gap. It's being led by some of those fundamentals in that cash market and the supply side.
Well, you mentioned some of those bids being passed last week, and I'm hearing from some producers. I heard from a few today, actually, that they were commenting on we're not really seeing heifer retention yet in the countryside. You look at some of these margins and more, and I know cash is still running hot in many areas. I mean, I just look at this cattle market, and yes, we correlated with stocks, but I just have to wonder if now that the stock volatility is lightened up a bit, that's going to give cattle a reason to run back to the upside, John.
I think so. And again, that's something I'm watching too, is just the money flow. I really like to close this today, and I will see if we can get some follow through, a little gap open on the charts and for both lives and feeders. And then we just continue to see firmness going right into the final trades of the day. So that sets us up probably for some movement tomorrow. I mean, I think a big key will be what do retail values do. If they stay firm, that's a possibility. But getting back to your point too about heifer retention, we've seen heifer slaughter numbers just jump the last couple of weeks. Some of that is just a pure fact of how much guys are getting paid on the cash market. We're talking cash being disappointing in the South last week at 204. It just kind of tells you where we are. And this market may very well have some traction back in it again if the numbers stay tight. So for a producer who already has a lot invested in these cattle to pull heifers aside and let them sit on the sidelines and become breeding stock, it's almost a difficult situation. That if you can take advantage of the cash market and keep the money in your bank account per se. So we'll see that heifer retention eventually kick in sometime, but right now the market and the fundamentals aren't going that way. And then the other side of it too, we're watching what's going on in the Western Plains, things along those lines. Things are dry in some of those regions, especially in the southern part of those Western Plains. Yeah, they picked up some showers or wherever here, but a lot of the forecasts are calling for a difficult growing season out there for pastures again. And that's going to be another thing that's going to really limit heifer retention, is just going to be the conditions of the pasture lands in the western part of the United States.
How about that hog market? And I wonder here, and I think we've touched on this, but you look at April, May futures, April, a slight discount to May, then May, a sizable discount to June futures and more. I mean, you look at the technicals, the charts, and just the price action in hogs right now. What stands out to you in lean hogs, John?
Yeah, I like the price action today. I've been watching for a couple of days now and talking about those summer contracts, and they felt cheap at the $94 level. So, I've had some guys step into those positions here. We still got some gaps on the chart in that June contract, and they're a long way away from here. So we get some price correction. Like we got a gap still all the way up around that 104 area on this June chart. That might be something this market wants to target. Again, kind of like cattle, the supplies aren't massively large in terms of hogs on the front end. At least as maybe we get past through this window. It feels like we got a few hogs here now that are kind of weighing on things. But I think those summer hogs look a little bit cheap here at this time frame. Again, the same type of thing happened. I mean, we saw big selling pressure in the hog market, the live cattle market, on the Commitment of Traders report going on, again, published on Tuesday before the buying started kind of kicking in. But again, money just left that market, and value was there. And I think we've seen some value buyers step in. Now we'll see if the fundamentals can lift this market higher. That front end's pretty tied to the index right now, with April coming off the books here relatively soon. And then that May contract is just so inactively traded, in that regard. So the focus really is going to be those summer contracts. And right now, like I said, even at 95 today on the close, looks like a bit of a value considering where they were trading just a month or so ago.
How about the grains and oilseeds? Let's head over there, John. A fairly quiet day accorded soybeans. New crop beans did find some green on the screen, while the wheat trade was under more pressure. We can talk about that in a second. But in terms of row crops, quarter beans, it just felt like a quiet start to the week after a volatile week last week.
Yeah, starting on the soybean side a little bit here. It's been kind of one of those, we seem to talk about these when they happen, an unloved rally, trying to find the rationale why we've put 50, 60 cents on the bean market. Some of it probably is just the pure fact that you look at new crop beans getting a little bit. Did we just get too cheap down there at that time frame? 83 million acres, but then you got a corn market that's strong. I'm still in the camp that 95.3 number for corn is probably a little light. Just from talking to people and heard today, Western Iowa, the amount of guys that are planting corn on corn was quite surprising in some areas. Just again, we need some bean acres, and maybe the market's throwing a little premium into those deferred contracts on that. Plus the other side of it too, we saw a really big move in the July-November spread. Kind of counter seasonal given the way things were. That July contract kind of popped out. So I think we're seeing some profit taking off that spread as well, with now selling the July, buying November. Because obviously, if you just look at the picture, got a tight acre supply number coming forward. Demand will be a question, obviously, if the tariffs continue. And, realistically, it kind of just sounds like the tariffs are now targeted at China, given all the other changes in rhetoric and talk that's been out there. But then you're still dealing with a massive Brazil crop that's, finding its way to the marketplace, maybe hitting some equilibrium where it's going to limit price gains. That's weighing on the old crop supplies in terms of movement. So that spread was poised to take some value out, and it looks like it's continuing to do that. And we do need a base number of acres here. And if we do see more corn acres come in at the expense of beans, just because of the profitability side of it, this market maybe just trying to make sure we get a few extra acres bought out there. But there's still really not a lot in the bean market that makes me feel warm and fuzzy other than price and value here at this time frame. And I'm a little cautious that we could see this thing roll back into possibly a May low, especially if we really do see some demand trying to fall apart here because of the lack of competition or the lack of price that we got in terms of those South American supplies weighing on us.
On the corn side, I'll say D's corn at 460 range on the board, getting a little bit of a rally there here in the last couple of days. I mean, corn, we touched on this too. It just feels like it's holding firm amid all the outside noise, John.
And there's reasons there. I mean, obviously, we saw the USDA numbers, we saw the cut and carryover here last week, and with that carry out being down to that 1.465, it's getting pretty doggone tight. And realistically, with that exports and shipments number today, 1.8 million metric tons, a big number overall. We're still looking at a corn demand picture that probably can tighten up that carry out even more so. So the market's going to start thinking about that May report when we get that number from the USDA first time for 25-26. They're going to put out there the current acre number, 95.3. They'll put out the yield at 181. If they leave demand static from this year, we're going to be about a 2 billion bushel carryover. But immediately this market can start making cuts saying, okay, what if we're at a 177 yield? There's 400 million bushels off the pile right there. It won't take much for that carryover for next year to get down in this 1.5, 1.6 window, especially given some of the demand that we've seen. I know the Chinese demand hasn't been here this year, but realistically, we reshuffled the deck chairs for the most part. They didn't buy corn from us, but a lot of other people did. We see that sale today to Japan. They've stepped into the market full speed. Mexico is going to continue to be a strong buyer, given their demand usage side versus their lack of production due to dry weather the last couple of years. So the picture for corn's got a little different tilt to it here overall. Now, we struggled on the old crop here the last couple of days. I think we got a couple things going on. First off, again, July, December spread really got moving. I think we're seeing some just profit taking off that spread, but the fundamentals point to that. Tight supplies, good demand in the front, big acres possibly coming in the back end. So we'll see that maybe rebound, I think, after we get through this window. Plus, I do think there's just a lot of corn moving. I talked to a couple producers today. First calls they made, they were in the truck ready to make, delivering on their May contracts or just getting some corn going. They wanted to get it all taken care of because the planting window is coming right around the corner for them at full speed. I think that's just something we got. We're just in that window where we're just going to see some grain pricing here as we get close to first notice day in the May contract as well. I think all those things have been limiting factors to when they're a little more friendly South American weather for corn. We just seen a little bit of profit taking off those front end contracts.
John Heimberg with Total Farm Marketing is with us here today for market analysis. How about that wheat trade, John? Moderate losses really across the board. I just have to think weather related. I know there's some rain in the forecast for parts of the plains. I mean, I didn't see much else because the dollar was weaker. I would think that would be supportive maybe for the wheat trade, but we just found losses on Monday.
It just feels like that was the drive today. Again, was just the fact that we got some rain coming in the southern plains, helping out that KC wheat crop. But to me, wheat's becoming maybe a sleeping giant. We'll have to see if we get the right places for things to trigger. Number one, don't fall asleep on that Ukraine or that Russian wheat crop. There's still some production concerns over there in the longer haul. Those would be things that maybe materialize later into the summer as we get into their harvest. On top of that, too, our demand base is pretty good. I know the USDA made some adjustments on demand last month or in the report last week. But, today's export shipment number well above expectations again. Good to see that those wheat bushels moving. You talked about that big break in the dollar. I mean, we're talking a dollar trading at 2022 levels. That's just been helping out the commodity space in general. I do think that was a big factor in some of the strength after the report was more about us, maybe this market pricing in the weaker dollar in general in terms of commodities. So there's some things in this wheat market that are going to need to be watched. Does it feel like a value here? Yeah. If you made some sales, might be a great spot to look at some reownership strategies, calls over top the market, get down into that September, into the December windows. And let's see if this story really can put together. Because again, just like corn, the global picture in terms of wheat does look a little bit is actually very friendly in terms of what's available to the world when you take out those Chinese stockpiles. So there's could be something that possibly could brew there. So that's something I would definitely keep an eye on. Again, if you've made sales, get some paper over top of them because we all know if when a wheat market wants to run and the funds want to push into it, we can get a pretty good rally.
John, good stuff as always. Any final thoughts you would share with folks as we close out the show today?
I know just kind of talking about that corn market and the conversation I was having with a lot of guys today, where are we at on the defensive side? I know there's a lot of buzz about positive upside, summer weather, all those fun things in there and with the demand, but just don't fall asleep on where you can protect yourself. That was my conversation with people today, where we're still trying to protect the 450 area in December corn using put strategies, got orders working. By the Father's Day window, I went, guys, pretty well covered for that new crop corn in that regard, with a combination of puts and sales, and then we'll go from there. But at least make sure that, what if the weather's good and we hit 96 million acres and demand slows down because of tariffs? Next, that what I was thinking could be a 1.5 could also turn into a 2.2 billion bushel carryover pretty quickly next fall. So make sure you got all your scenarios covered in terms of your marketing plan.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, what's the best way to do that?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Don't forget that website of ours, totalfarmmarketing.com. Just love to have a conversation with you. I know you're going to get really busy here in the next few weeks in terms of getting going in the fields, but just don't forget about that marketing piece while you're out there getting the next crop year put together.
John Heinberg, Total Farm Marketing. Always good to chat with you, sir. Thanks for joining us. Have a great week. We'll talk to you again real soon.
Sounds good. Have a great week. Have a great Easter, everybody.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.